Okay, well, I think we'll get started now. So good morning, everyone, again, and welcome to today's webinar, the 3 essential tools for trade business success. Just a little bit of housekeeping before we get started, although I'm sure most of you will know how Zoom works. You can click audio settings over here to select and test your speakers. You can submit any questions you have throughout the webinar using this Q&A button, and we will answer as many questions as we can at the end of the webinar. If you do need to leave the webinar at any time, you can just click this leave meeting button and you can rejoin the webinar by using the same link that you used to get here. Once the webinar has finished, there will be a short questionnaire that will pop up on your screen. If you could just spend a couple of minutes completing that for us, and we do read every piece of feedback that we get and take it on board to improve our webinars going forward. So please do complete that survey for us. So first of all, I just want to explain a little bit about Rosalind Associates. Our purpose is to help our clients build a better business and help them make more money, save time, and live a better life. And we do this through our business development and coaching services, combined with our financial expertise as accountants and tax advisors. So who are we talking to you today? Well, my name's Ikra Aslam, and I am one of the client managers here at Rosalind Associates, and I'll be taking you through the first half of the webinar. And then we've got Ian McLeish. For those of you who don't know him, he is one of the directors at Rosalind Associates, and he will take over from me about halfway through up to the end of the webinar. Before we get to the main event, I just want to share a thought of the session from The Rock. Success isn't overnight. It's when every day you get a little better than the day before. It all adds up. There isn't this one magic thing that makes you or your business successful. It takes hard work and time. It's not about making huge drastic changes that are going to give you overnight success. Most successful businesses haven't become successful overnight. There has been a lot of hard work and time put into that business, which most people don't see because it's behind the scenes. It's about making small incremental changes and changing old habits to get that little bit better each day. So you're all in business for a reason. I want you to think about when you first started your business. What did you dream it would be like? What did you want your business to give you personally as a business owner? Just take a moment to think about that. Now, what percentage of your dreams has your business delivered on? Is it 100%? Your dreams have become a reality and life couldn't be sweeter? Or on the other side of the scale, 0%, the dream's more like a nightmare, and sometimes you worry that your team members are making more money than you are. So just a little bit of interaction from you all to make sure that you're awake and paying attention. I want everyone to get their phones out and head over to menti.com and enter the code that you can see here on the screen. So if you just type in menti.com, it'll ask you for this code. You just put the code in and it'll come up with this question: how well is your business delivering on your dreams? And you'll be presented with 5 answers to choose from, ranging from 100% to 0%. It is anonymous, so please do be honest, and we should get the answers live on the screen. I'll just give it a minute or so, and it should refresh as we go along. Just give everyone a chance to get on and put some answers in. So we're getting some answers in so far, which is good. Okay, still going, it's good. Okay, so majority of people that have answered have said 40%, about half of my dreams. We've got 20%, it's more like a nightmare help, 20% small aspects of my dreams, and 20%, 80%, nearly there, just need a final push. So that's great. So I'm sure you realise that you're in good company here. Being in business can be lonely sometimes, and it does help to know that other people are experiencing many of the same challenges that you are. And as accountants and business advisors, this is what we see when we are talking to business owners, and this is why we've put this webinar together, so that you can learn the tools on how to achieve better success in your business. It's really important that you do write down some actions that you're going to implement in your business. So as we go through the webinar, if you come out of this session with at least 3 actions that you can put in place in your business, that is a huge success. If you've come along to any of our seminars, which feels like it was a very long time ago, you would have heard Ian talking about the fact that the biggest failure in business is FTI. And that stands for failure to implement. Please make plenty of notes during the webinar. If you don't write things down, you won't remember them. And if you don't write down the actions, they won't happen. So today we're going to share with you the power of 1%, having the courage to change. What are the 3 essential tools for business success? Examples of how to use those tools, and then it's accountability time, the time for you to decide what you're going to do as a result of coming along today. We will show you how adopting these 3 tools in your business can greatly improve your profit and business value. And we also want you to get maximum value from this session. So if you have any questions at all, or even insights that you want to share with us or with the group, remember, just put them in that Q&A box below, and we'll cover as many as we can at the end. So let's take a look at what we mean when we say small changes add up. If you improve by just 1% each day, after a year, you'll be a massive 37.8 times better off. For example, if you were to increase your sales by 1% each day for a whole year, by the end of the year, you would be selling 37.8 times more each day. What would your business look like if you increased your sales by 37 times? Think about what your business would look like if you could improve job efficiencies by 1% consistently, or if you could reduce costs by 1% continuously. What this formula demonstrates is that long-term benefit of continuous improvement. Of course, it's unlikely that you will achieve 1% growth in sales or 1% reduction in costs every day. The point I'm trying to get across here is that the power of compounding growth. Even if you achieve 1% improvement each week, you will double in just over 16 months. So what we're simply looking at is to achieve continuous and sustained improvement. Now let's consider what would happen if you don't make those changes. Let's say your competitors sharpen their game and you fail to keep a track of changes in technology, or you manage your team ineffectively because you're so busy and your sales start to reduce by 1% each day. Let's say on average, your sales on a daily basis are currently about £1,000 and your sales regress by 1% every day. Your sales will just be £30 daily by the end of the year. What would happen in your business if your efficiency decreases by 1% per day or your costs increase unchecked? Again, your sales or efficiencies are unlikely to drop in a linear way like that. The important point is that unless you make continuous improvement, your business performance is likely to drop over time. And as you can see, as Einstein said himself, compounding is the greatest mathematical discovery of all time. Change is inevitable. We all know that, don't we? But growth is optional. Change is not easy, but have a think about other businesses that haven't adapted to change and what impact that has had on them. I'm going to show you a few examples. Kodak basically became the poster child for companies who failed to react to their changing market. In 1976, Kodak had a market share of 85%. But because they failed to adapt to change, by 2003, their market share had dropped to just 15%. Kodak actually developed the first digital camera, but they were so worried about the effect going digital would have on the sale of camera films that they didn't push on it. Their failure to accept change from film to digital had a massive impact on their profitability. And now, most of us carry a camera in our pockets, can instantly take a picture and upload it onto social media. Another example here is Blockbuster. And at the height of its success, it had over 9,000 stores worldwide, 84,000 employees, and 85 million registered customers. They had the opportunity to change, but didn't see the value in changing at the time. And then in 2000, Netflix was starting out with a male DVD rental service. The CEO approached Blockbuster to discuss Netflix handling Blockbuster's online business, but he was apparently laughed out of the room. Netflix now has over 200 million users. And when I last checked, Blockbuster only had one store left. What these examples of disruption highlight is that change is not easy. And when you're riding the wave of success, it can be hard to see the need to change. We all have inbuilt habits and behaviors that we repeat. We also have so much going on in our lives that it's hard to start doing something different. This is the formula for change, and it will help you increase your ability to change. So on the right-hand side here, we have an R, and this stands for resistance. This is what's stopping you from changing your behavior. This can come in three forms: no time, no money, or you don't see the benefit of changing behavior. You need to build up the left-hand side of the equation so that these variables are greater than your resistance. So what does the D stand for? Dissatisfaction with the status quo. You need to understand the consequences for not changing your behavior. What happens if you don't learn how to grow your business or improve profitability? Profit may drop, you might not be able to take that family holiday, or you may have to get rid of some team members. Then we have the vision. What will your life look like if you do change your behavior? What do you want your future to look like? More holidays, more money, more time with your family? Having a clear vision will help you drive to change your behavior. And finally, the F stands for first steps. What are the first steps you need to take in order to achieve that vision? And we show this F in a lowercase to represent the fact that the steps are small and easy to take. Remember, the consequences of inaction will heighten your dissatisfaction and cause the business to regress. The fact that you're here today means that you're open to change. So that's one step in the right direction. The three essential tools we're going to show you now are the first steps you need to take to start moving towards your vision of positive future state. And as you'll see from this formula, your resistance to change has to be outweighed by your dissatisfaction with the status quo and your vision of a positive future state. So with all that in mind, we are now going to have a look at the three essential tools for business success. The first one being the annual business plan, Second being an annual forecast, and 3 being ongoing reporting and accountability. You've probably heard about them before from us or from others, but you might not know exactly what these tools look like. A business plan essentially takes your dreams from your business and lifestyle and breaks them down into goals with actions and due dates. The plan becomes your guiding document to deliver you the business outcomes that you've always dreamed of. The annual forecast then takes the budget from the business plan and breaks it down into monthly targets with details of income and expenses, including things like tax, dividends, asset purchases, and loan repayments. The forecast shows you the numbers you need to achieve your desired business outcomes. The ongoing reporting and accountability makes sure that you take the action required for the plan to take form in reality. We've all made plans and put them in a drawer somewhere or in some sort of hard to find folder on our computers. Occasionally we find them again and rarely have the actions taken place and the outcomes achieved. Unless someone holds you to account, change won't happen. So who's going to hold you to account? Now let's have a look to see what these 3 tools look like. There are literally hundreds of books and articles on the internet about what the business plan should look like and what it should be. And here's what we consider to be best practice. Your business plan should have a clear purpose. This should be about a 5 to 7 word statement that explains why your business exists for your customers. You need to clearly articulate your vision. What will your business look like in 5 years' time? What do you want to achieve? What does your business need to deliver to you? Remember, your business is there to serve you, not the other way around. State the hours you want to work, the holidays you want to take, how much money do you want to make? A high-level budget in your business plan helps identify revenue, i.e. sales, and the targets for the sales for the year, and that's based on what you've recorded in the what we want to achieve section. The budget also forms the basis of essential tool number 2, which is the annual forecast. Key performance indicators are things to measure that will make sure you're on track to achieve your goals. And it could be things like sales per month, gross profit percentage, or even the number of days team members are achieving their individual targets. Choose a maximum of 5 and make sure that you can measure them. You need to identify your opportunities and vulnerabilities. You'll then draw your ideas from these for your plan. Your goals should maximize the opportunities and mitigate the vulnerabilities. Your business plan should have your goals for the year. Make sure these goals are measurable and achievable. These should then cascade into 90-day goals with clear actions and a person responsible for each action. Review your business plan regularly to ensure the actions are being completed by the due date, and then update your 90-day goals each quarter. These are the rules that we follow when we develop and update our own business plan, and also follow them during our business planning session with our clients. Firstly, all key decision makers should be involved in the session. They must also complete pre-work, and we send this out to clients a couple of weeks before the session. This ensures that everyone has taken time to reflect and prepare, and that everyone gets the chance to have their view heard. It also allows us to identify any areas of conflicting opinion and misalignment. We recommend using an independent facilitator. If just the decision makers meet to develop their business plan, it's likely that there will be a level of disagreement. It's also likely that 1 or 2 people will dominate the discussion, and others won't get the opportunity to have their views heard. An An independent facilitator can help you manage these risks to reach agreement. Your business plan should also be on just one page, and it can be double-sided, and the business plans that we normally help clients produce are double-sided. There's no point developing a 30-page business plan that you glance over once and you put it away in a drawer to gather dust. It needs to be visible at all times. And with it being on just one page, you can stick it on the wall in front of you, behind your laptop, so that you can see it constantly, so you know what you're working towards every day. Share your plan with your team. You might need to cleanse it slightly to remove sensitive information, but your team should know the plan that you have for the business so that they can buy into your vision and align their goals with yours. Report against your plan monthly. Ensure your 90-day actions are being completed and that you're on track to achieve your goals. Review and update your 90-day goals and actions each quarter, and ensure you're on track to achieve your annual goals. Do a final review of your business plan each year. Some things such as your vision and your values may not need updated, but do take the time to review each session and update them accordingly. So what will this one-page business plan look like? This is an example. All components are clearly identified, and we like to keep things simple and easy to read and understand. So we've got the purpose here, the vision, what we want to achieve, and values section at the top. We then have the high-level budget. We update the year-to-date column each quarter to ensure that we're staying on track. Next, we have the KPIs that we'll be measuring. And as you can see, we've added the targets for the KPIs so that we know what we're aiming for. We then have our ideal client and value proposition, which is clearly identified. And these should definitely be shared with your team so that they know who your ideal clients are. We then have opportunities and vulnerabilities. And then we've identified what are our most critical challenges. And then this is the back of the business plan, so the second page. First, you determine your annual goal. You then break it down into 90-day goals. And each of these goals should be a step towards achieving your annual goals. Then work out the actions that you must take in order to achieve those goals. Record who is responsible for each action and give a due date on it. And that's essential to make sure that someone is accountable. And we recommend setting about 3 to 5 goals for the year. And this ensures that they are achievable and that you have time to focus on each goal. So that's the first tool, your annual business plan. And if you have any questions at all about the business plan, please do just put them in the Q&A box. I'm now going to pass over to Ian, who is going to talk you through the next 2 tools and then take you through to the end of the webinar. Over to you, Ian.
Right, thanks, Ikra. That was the business plan in essence, the first of the 3 tools. What I'm going to talk about next is the second of the 3 tools, which is the annual forecast. What this does is kind of, as somebody once said, it puts the rubber on the road. It basically means that your big picture business plan with your goals, etc., is to convert it into a financial plan that you can then measure and tell whether you're actually achieving it. You might have done this for the bank in the past, but I believe that it's absolutely essential if you want to get where you want to go, that you have an annual forecast. So what's part of, there's 3 parts of the forecast, or you can see them as 3 separate forecasts. Now, in my view, the profit and loss is the one essential forecast that you do, because any business that isn't making sufficient profits will not survive. And any business that's not making sufficient profits to get you what you want from your business is failing. It's not doing what you wanted it to do. And I would hazard a guess that could be probably a significant majority of small trades businesses who aren't making the money that they want from their business. So the second one is cash flow. Now, this probably puts me out in a limb a little bit amongst accountants, is that cash flow forecasts aren't always needed. They're needed for businesses that are short of cash because it's very sensitive and they could run out not being able to pay things. It's also necessary for businesses that want rapid growth, because as your business grows, what's called your working capital requirement, in other words, the amount of cash that's needed to pay for things before you get paid, essentially, that's really important to know what you're going to need, because there's nothing worse than growing your business, taking on new people, and then finding out you haven't got enough cash to pay them because you've done the extra work, but you haven't been paid yet. So cash flow in many circumstances is important too. The balance sheet is, if you want to be, a top class financial wizard, the balance sheet basically shows you the net value of your business. Now, there's a few provisos to that, but essentially that's what it does. If your assets are getting bigger and your liabilities are getting smaller, your net assets are growing, which basically means your business is becoming more valuable. Now, there's a lot more to that. And one of our previous webinars on knowing your numbers for trades businesses goes into a lot more detail about what that actually means. Now, the balance sheet can also be the source of some of the KPIs. For instance, if you want to look at your average amount of money owed to the business, that's known as debtor days. If you want to that, you can measure that. That's a balance sheet item, and you can use your balance sheet to tell you and what that is to measure that KPI. So how do you develop your annual forecast? Well, obviously you do as much of it as you can yourself, so that you understand your business. You're the best person to, what you need to achieve, what you want to achieve as a business. If you're working with us, you do the pre-work. In other words, we send you work that you do in advance to help you get to this as far as you can by yourself, so that it's your forecast. So always start with what do I want to get out the company? Now, whether that's salary or dividends, how much do you want? It might be £50,000, it might be 150, it could be even more. How much do you want to take out the business each year? And then what you do, then you can work backwards from that. You can work backwards. This is called bottom-up budgeting. And again, that's in one of our earlier webinars that you can get on YouTube and on our website. If you work back, you can work all the way back up to how much you have to sell in order to create that profit for you after tax that you can then take out and buy your house, whatever you want to do with it. Next thing to do is look at last year's figures. Don't do that first, but look at what you want to achieve, and look at last year's figures and see what differences there are, and see, give it a reality check to some extent. And one of the things we find often when working with clients on their annual forecast is they've done your budget, they've done the top level, high level financial projections. We will sell, like in the previous example, 2.8 million, and broke it down into quarters. But then when you're doing it in a bit more detail, you look at it and say, is that possible? Can you actually generate that much income in a quarter or in a year? Look at, when you're in a trade, you have to say, well, what's our capacity? How many people do we have, and how much work can they generate? And then, so you might need to amend that a little bit. And then, if you find you can't achieve what you wanted to achieve, we can start looking at what you could do to be able to do that. And that could be various things. It could be looking at pricing. It could be looking at your overheads. There's all sorts of areas that could be relevant. And then, as it says, review and adjust. In other words, make sure that the final forecast that you have is something that you believe is achievable, it's real, you can do it, and you've got an idea in your head on how you're going to do it. So once you've got your forecast in place, the next thing to do is, what we do is upload that into our software. Now, there's lots of different ways of doing this, but essentially you need something where you can upload it and then on a monthly basis compare your actual results with what you said you wanted to do. That could be sales, it could be gross profit percentage, it could be some of your overhead costs, etc. So you're looking at your actual against your forecast and looking for variances and looking at progress to achieving your KPIs, whatever they are, but they might be things like gross profit percentage. How much of our sales do we have left after paying for materials and subcontractors and possibly direct labor? How, as long as you're consistent in that, how are we doing? Are we achieving the figures that we said we needed to achieve in order to get the profit that we want for our lives and our families? So that's good. But then, who holds you accountable? Who actually says, have you done it? It's you often start, I mean, we've seen it with some clients who they do their business plan, they maybe even do a forecast, and we offer them accountability, and they basically say, no, I'm fine, I can do it. 99 times out of 100, what happens is a year later on, sometimes they can't even find their forecast. They haven't done it. So what you need is someone independent, someone who's not emotionally or financially tied up in the business. That's why obviously a spouse or a partner isn't necessarily the best person, because they will have various emotions related to that. You need someone with backbone and heart. And the backbone is basically somebody who is willing to tell you the truth and not basically smooth over things and say, never mind, you'll be better next month or whatever. Someone who's willing to say, look, this is how you've done. You're not going to achieve your goals if you carry on like that. What do you need to do differently in order to do that? But you also need somebody with heart and somebody who cares, basically cares about the success of your business. Somebody who cares without being emotionally tied up in it. Also, on a monthly or a quarterly basis, you'll have actions. You'll look at your reporting and say, oh, well, our gross profit is down. I wonder what's happening there. You have a look at it. You're held accountable, you're coached in it, and eventually you decide what you've uncovered, what the root causes are, or at least you know what you need to do to find out what these are. And these are actions that are written down, which are then part of the minutes of your monthly coaching. And then next month, have you done it? So action points are one of the things that are always on the agenda for the next month or the next quarter. Have you done it? If not, what stopped you? Is there something else you should have been doing? Do you need to keep doing it? In consequence of an action, in other words, you have to speak to this person, this independent accountability coach, who will then say, you need to do something about this, or something's not going to work. So, in summary, how are we doing time-wise? That's not too bad. In summary, remember the power of 1%. What that says to me is, don't think you've got to make massive change right away. That's just too difficult. Just do the little things. What could you do differently that could improve your business, could improve how close you're getting to your goals? Yeah, you will have to change. Change is essential. If you don't change, you will end up doing stuff that nobody wants anymore, or doing it very inefficiently. You remember the 3 essential tools that you need for success. Your business plan, which sets out your goals, your values, what you're going to do, your action plan, and your top level financial budget, your 90-day goals. Then you've got your annual forecast, which I've just talked about. Essentially, this is what we're going to achieve financially. And then you need to report on that, your actual results against that forecast. You need to be held accountable to make sure that you don't just put it in a drawer, as Ikra said, and forget about it all. You've got to be held accountable. Why have you done this? Why have you not done that? What's happening here? Be answerable. And finally, you've got to take some action. It's all very well coming along to the webinar, listening to all this and going, yeah, it's all very nice, but I'm not sure what to do. If you don't know what to do after this webinar, get in touch with us, get in touch with Ikra or myself. We can talk it through with you. So the idea today was to help you take today's message and implement some positive changes in your business. So what are you going to do next? Honestly believe that doing nothing is not an option. The fact that you've come along today or are watching this recording means that you need something to change. Your business isn't giving you what it should be doing. And as I've said many times, your business is there for you, not the other way around. So you need to make a clear plan that you can articulate to your team. You've got to know it inside out so that you know what you're trying to achieve without having to dig that plan out. You've got to develop a forecast, so that gives you a route. It's like a roadmap to where you're going, and it tells you whether you're going off track or whether you're on track to achieve your goals. You need to be held accountable. You need to find somebody who will have enough understanding to know what you're trying to do, be trustworthy, who won't go telling everybody else about it, but will hold you accountable and make sure that you're actually doing what you say you're going to do. You need to focus on what you can do. There's no point worrying about what you can't control. That's just using up your energy. And finally, if you need some help, we're here. So the last thing I want to do today is just say a little bit about what our processes are and how we can help. So this is a kind of infographic which explains to some extent how we work with new clients. So after we've had an initial phone call, just to make sure that we're all kind of on the same page and suitable for each other, we'll have what's called a proactive accounting meeting. What that is a 1-hour session where we look at your business, your lifestyle, your lifetime goals, your business goals, look at what you're doing to achieve them, how you're getting on, what you could do differently, and how we might be able to help. And that could include also, obviously, accounts and tax returns and things like that, but that's not really exciting. But these are things that have to be done well in order to do the more exciting stuff of actually achieving what you're trying to achieve. We put together a proposal. Once that's agreed, you're introduced to the team and make all our introductions. Then we get you set up on all the different things. If you're not on something like Xero, we have a look at what your Xero is like to see how up to date it is, how accurate it is. And again, we have updated accounts and records. So we'll do a kind of an overall checkup to make sure that the bookkeeping, the record keeping, etc., the systems in place are sufficient to produce good reports on a monthly basis. Then we get on to the three essential tools. I'm not going to go over all them again, but obviously the business plan, financial forecast, and the monthly, quarterly coaching. And just to reiterate, the point about the updated accounts and records is we need to have accurate real-time bookkeeping and record keeping to be able to correctly determine how you're doing against your forecast. A bit more practical in terms of what our offers are. We've got business plans for £1,500, and these are all plus VAT. Financial forecast is £1,500 plus VAT. Quarterly coaching, £2,000. Monthly coaching, so that's quarterly coaching, so that's £500 a session effectively. Monthly coaching is £3,600, which is £300 a session. We can send out a Building Better Habits worksheet. That's for free. And so when you leave and fill in the feedback form, if you ask for that, tick the box asking for that, we'll send it out to you. And similarly, we offer a complimentary 1-hour meeting, which essentially is that proactive accounting meeting that we talked about in the previous slide. So we'd sit down, we'll offer that to anybody who we feel we can work with and who feels that we might be able to work with us. We'll sit down. At the moment, it's still on Zoom, but we'll go through an agenda and we'll make sure that we've covered all the areas that are relevant. So that's the end, almost. So Ikra, are there any questions?
Yep, we've got a few questions that have come up so far.
Okay.
Do you want to turn your video on, Ian?
I'm just trying to do that. It's the usual story. I can never find how to do it. Hang on, just give me a sec. I'll get it done.
No worries. Right, so we've got a few questions that have come through so far. If anyone has got any more, just pop them in the Q&A box and we'll get through as many as we can. So we've got a few so far. Yep. I'll get them up on the screen. Okay, so we've got one here that says, can you do the ongoing reporting without the business plan and forecast?
It's a good question. Short answer is yes, you can. The longer answer is it's normally not as valuable for businesses, for small businesses, because if you might see from, if you haven't got the business plan and the forecast, it's basically not knowing where you're going and not knowing whether you're getting there. So without that, it can become a bit difficult to determine whether things are happening because you're not getting any feedback. You don't know where it's like driving in the dark without, any headlights on and no sat nav. And so someone's saying, how am I doing? You go, well, I don't know, because I don't know where we are. I don't know where we're going. Having said that, have worked with some clients without doing the business plan forecast. And in that context, it tends to be more of a sounding board, a sort of a way of giving the business owner a chance to talk to somebody knowledgeable about their business, about the decisions they're making, etc. So there is some value in it, but I would say the most value comes by putting the three together.
Okay, thank you. We've got another one here. What do you do as someone who is independent to the business if numbers are not hit?
Good question. If the numbers aren't hit, I suppose the first question is why? Well, first question is which numbers and by how much? The second question would be, why do you know why they weren't hit? Do you appreciate that if they're continuing not to be hit, you won't get your targets, your goals? So what are you going to do about it? These are the type of questions we'll be asking. So if, for instance, the gross profit rate is less than projected or forecast, and that can have a really large knock-on effect on the bottom line over the year. So I would say, do you know why? And you go, oh, well, no, I'm not sure. So I would say, well, could it be that you've got your stock figure wrong? So there's a stock that you bought a lot of stock or a lot of materials during that month, and you haven't been an adjustment in your reporting. And if that's not the case, then it would be maybe your salespeople, if you've got salespeople, are discounting and you don't know about it. So your actual sales price is lower than you'd expect for jobs, whereas material costs are exactly the same. So that could reduces your gross profit. It might be that there's a lot of wastage going on. So there's lots of possibilities there, and it's not. I can't answer these because I'm not hands-on in the business day to day, but the business owner does know how to deal with those things and find out what it is. So in that sort of example, they would go away and they'd investigate what's happened. And that would be an action point from that meeting would be, business owner to investigate the reason for the fallen gross profit and report back at the next meeting. And obviously make any changes if they can. They'll wait till the next meeting to do it, but they're held accountable to make sure that that's done.
Yeah.
Okay.
We've got another question here. Do you do these services for businesses that you don't do accounts and tax for, or would I have to move everything over to you?
We do. Again, it tends to not work quite as well if we're not doing the accounts and tax returns, because I suppose what we want to do is ensure very high levels of quality in the bookkeeping, in the accounts production, etc. So occasionally we'll start working with a client and we'll do a business plan and forecast, and we're not doing the accounts or the bookkeeping or anything like that. And we do the reporting, and then at the end of the year, the accountant makes so many changes that should have been picked up in our view during the year that the figures that we thought that were getting reported, we thought were accurate, weren't. And I've had one case where that's basically wiped out almost their whole profit because the bookkeeping was done badly. So I'm not saying that we need to do the bookkeeping and the accounts and tax, but we're very well placed to do that. I mean, if we're doing the bookkeeping and we're doing the three essential tools, the compliance side of it becomes very easy because we've been looking at these things all year. There's no surprises. It also means that if someone says, I'm getting a car, in one of these meetings, we can immediately come in with, is that a good idea from a tax point of view? Whereas if we don't know about that, we can be advising on tax, etc. throughout the year, which we wouldn't normally be doing if we're not doing their compliance on accounts and tax, etc. So there's lots of advantages of us doing both, but it's possible to do it without moving over. So I understand that behind the question is probably a kind of, what's a huge step to do all that. And so in that instance, I would say, okay, let's try it. But what we tend to find is that people eventually want to shift over and transfer everything to us, because to keep it all in the one house and keep it all top quality.
Yeah. Okay. Well, it looks like we've got just one more question.
Mm-hmm.
What's the difference between the monthly and the quarterly coaching?
The difference, well, it's the monthly is, I suppose it comes down to how much the business owner wants to get out of this and how quickly they want to make change. Quarterly generally is better for smaller businesses, because not so much changes in a quarter than in a big business in our experience. Monthly means that, if you think about it, if you're driving or steering a ship or something like that, if you only check once a quarter, if you're going in the right direction, you might have gone a lot further off track than you would do if you caught it after a month. So there's these sort of things. So sometimes it comes down to affordability, but essentially the quarterly sessions are a bit more expensive because they do tend to last longer, because there's a lot more to talk about, because there's a whole quarter's worth of stuff. But monthly ones get into a rhythm. You tend to get into quite a good rhythm, so that we know what we're doing, we know what's important, we know what we're looking for, we hold people accountable, and it all becomes, not automatic, but kind of efficient. And the quarterly ones, there's a bit more of a catch-up kind of thing to do. It takes longer to get into that meeting rhythm.
Yeah, it develops a habit as well when it's monthly.
Absolutely.
Yeah, definitely. Well, that looks like that's all the questions that we had. So thank you so much for those.
Okay. So thanks, everybody. Before we go, I thought we would share a quote, a parting thought. And again, it comes back to the same point about action. Action is the foundational key to all success. Now, what I would suggest is that you commit to at least 3 actions that you'll take as a result of today's webinar. Write them down, give each of them an owner and a completion date. And remember, if you need our support, we are here for you. So again, thank you all for attending. I appreciate your time is valuable. Please complete the brief exit survey following this session so that we can continuously improve and get your feedback on what other webinar topics you'd like to see from us. We hope we've given you plenty of ideas to ponder and some clear next steps for you and your business. Thank you very much indeed.
Thanks, everyone.